there, I'm Sarah Maiga, your go-to real estate expert and associate broker of Maiga Homes with Keller Williams. If you're new here and interested in all things real estate, be sure to hit the subscribe button by clicking that little icon in the bottom right-hand corner of the video. I publish videos on a new real estate topic every week, and you don't want to miss anything. Today's question is one that always seems to be on the minds of individuals when they go to sell their home, and that is, how much am I going to have to pay in taxes? Well, that is a great question. Let's start with first understanding what taxes are owed when you sell your home and what is capital gains tax. When you sell your home, the IRS wants to determine if the property you're selling has been used as your primary residence or whether it is an investment property. If it is your primary residence, then the IRS allows a loophole known as the home sale gain exclusion, or primary residence exclusion. Essentially, this allows sellers who file joint tax returns to exclude as much as $500,000 in capital gains from taxation, or single filers to exclude as much as $250,000 upon the sale of a primary home. To qualify, the home must have been your primary residence for at least 2 of the preceding 5 years, and you must have owned the home for at least 2 of the preceding 5 years. Although, the ownership and residence requirements don't necessarily have to happen in the same 2 years. And you cannot have claimed the exclusion on another home within the 2-year period before the sale. It's not quite as simple as taking the home sale price and subtracting your purchase price to figure out the gain. Your capital gain is the difference between your cost basis and net proceeds. So it's important to take a moment to define the following terms. Cost basis is the amount you pay to acquire an asset. This includes any acquisition costs or capital improvements. For example, if you paid $400,000 for your house and $7,000 in origination fees and other expenses, your cost basis is $407,000. You can also include value-added improvements in your cost basis, even if they occurred years after you bought the home. This might include major renovations, appliance upgrades, additions, and more. Your net proceeds is the amount you sold your house for after accounting for sale-related expenses like real estate commissions. If you sell your house for $500,000 but pay $30,000 in commissions and closing costs, your net proceeds are $470,000. So in short, if you sell your home for a net gain of more than $500,000 for couples filing jointly or $250,000 for singles, the gain in excess of the threshold is subject to capital gains tax. Capital gains tax depends on your income and how long you've owned your home. The IRS classifies capital gains into 2 categories: short-term capital gains, which occur when you've owned an asset for a year or less, and long-term capital gains. This occurs when you've owned an asset for longer than 1 year. If your home sale produces a short-term capital gain, it is taxable as ordinary income at whatever your marginal tax bracket is. Long-term gains are taxed at a rate of 0%, 15%, or 20%, depending on your overall taxable income. If you think you may be subject to capital gains tax, make sure to reach out to your certified public accountant today to learn more about your obligation. I hope that you took away some valuable information on capital gains tax in today's episode. As always, if you think you may want to make a move in the next year, or you might want to start the downsizing process, give me a call today and set up a consultation. I create custom moving plans for all of my clients up to a year in advance. In addition, I work with a variety of contractors who can help with things like decluttering, estate sales, paint, carpet, handyman work, moving, and more. Plus, if I'm not able to personally assist you, don't worry. I'm part of a global real estate company and can find you a similarly qualified agent anywhere in the world. In fact, if you haven't yet had a chance, please check out another one of my videos on why you should get a realtor referral for an agent when relocating. That will teach you all about how realtor-to-realtor referrals work and what to expect when you ask me for one. Be sure to subscribe to my YouTube channel today and tune in to next week's question. What is an estate sale and should I have one? You can also check out all of my other series on relocation, selling a home, buying and selling simultaneously, buying a home for the first time, new construction, and more. Thank you so much for watching. I'll see you next time.